Hi everyone, welcome to Gaming in Public Markets, the only show that focuses on game dev, stock news, and much more. Let's jump right in. One of the most significant but nearly overlooked news stories is Goldman Sachs Group's major stock acquisition in CD Projekt Red, the studio behind Cyberpunk and the Witcher series. Company reports confirm the purchase of a substantial stock package, though the exact amount hasn't been revealed. What we do know is that it's significant enough for CD Projekt to make an official statement. The fact that one of the world's largest investment banks, Goldman Sachs, is getting more involved in the gaming industry is a positive sign, potentially having big implications for the future of both the CD Projekt and the entire gaming industry. Speaking of CD Projekt, the company has been performing well and is fully focused on new games development, both in their famous franchises and brand new ones. Project Polaris, the next chapter in the Witcher saga, is already generating excitement, and their mysterious new IP, Haida, is also creating some buzz. In general, analysts are positive about the developments in the industry. Newzoo, a leading gaming analytics firm, just updated their forecast for global gaming revenue. They predict it will reach $188 billion in 2024, a 2% year-on-year increase. They also estimate a compound annual growth rate of 4.5% from 2024 to 2027, with the market hitting $213 billion in the next 3 years. The PC segment is expected to drive most of the growth this year, reaching $43 billion, a 4% rise from 2023 thanks to new successful releases. Mobile gaming is expected to generate $93 billion, making up almost half of the market with a 3% year-on-year increase. In this positive environment, I want to share some updates from GDEV. Last week, we released our Q2 financial report. Overall, GDEV's results are on track with expectations, considering seasonal factors and our current product lineup. Our bookings reached $108 million, a 3% year-on-year decline, primarily due to a drop in advertising bookings. However, adjusted EBITDA grew by 4% year-on-year, totaling $16 million. One highlight is that our selling and marketing expenses dropped by 7% year-on-year thanks to a more efficient user acquisition strategy. This led to an improvement in our core efficiency metric, which measures the lifetime value of a player against the cost of acquiring them. This metric saw year-on-year growth in Q2. Looking ahead, our focus remains on improving business efficiency and product development across all platforms with the goal of increasing the lifetime value of our players. As for our flagship franchise, Hero Wars, both PC and mobile RPG title performed well in Q2. Our team is focused on product development and growing lifetime value instead of scaling user acquisition. We also saw great success with our Tomb Raider collaboration, which excited our players and delivered solid results. Additionally, Pixel Gun 3D had a strong start on Steam with its PC edition, achieving success without significant marketing thanks to the game's dedicated community. The franchise saw a 10% year-on-year increase in monthly active users and a 45% rise in monthly paying users. Last month also brought an interesting development from Nexon, the Korean-Japanese gaming giant, as they unveiled their new growth strategy. Though not as well known as Konami or Bandai Namco, Nexon is a major player with a market cap of $17 billion. They are best known for franchises like Dungeon & Fighter, one of the most played games globally, with over 850 million players and $23 billion in lifetime revenue. What's interesting is that despite steady revenue growth and other key metrics, Nexon recently introduced a new growth strategy, focusing on existing franchises and new IPs. The company plans to leverage the power of established franchises to drive growth through new experiences on new platforms and in new markets, creating not just individual games, but entire new core franchises that are expected to delight players for decades. This approach is crucial because developing games without a strong IP is becoming increasingly difficult, as players now expect immersive entertainment experiences that go beyond the game itself. More and more gaming companies are adopting this strategy as it helps to attract and retain players more effectively while minimizing costs and risks. At GDEV, we recognize the critical role of strong IPs in driving success and are dedicated to a similar strategy. In today's gaming landscape, leveraging a popular and established IP often makes achieving success more attainable. A vivid example is the recent launch of the PC version of Pixel Gun 3D on Steam. The game achieved remarkable results without heavy marketing investments, relying instead on its existing community and the power of a name recognition. Given that the game has accumulated over 400 million downloads and has a multi-million fanbase, such success is hardly surprising. Let's talk about Krafton, the Korean gaming company best known for PUBG. Krafton recently released an impressive Q2 report with revenue beating market expectations by 28% as mobile sales soared 104% year-on-year, PC revenue expanded 63% year-on-year, maintaining strong growth thanks to higher traffic. Thus, the firm's operating profit grew 153% year-on-year, topping consensus by 67%. PUBG continues to thrive, with monthly active users up by 40% year-on-year on PC and paying users more than doubling. On mobile, localized content and improved monetization have led to a solid growth. Krafton is also branching out with new titles like Duck and Duck Mobile and Newzoo, which are set to release this year. Additionally, Krafton is accelerating its equity investments and the discovery of new IPs to diversify its platforms and genres. The company's stock price has surged nearly 60% since the beginning of the year, and its market capitalization has exceeded $10 billion. Such growth has allowed the company to impress the gaming industry with 11 new investments. Notably, in August, Krafton acquired Tango Gameworks, known for the survival horror series The Evil Within and the rhythm action game Hi-Fi Rush. So what does this all mean? Krafton has one strong and stable franchise, PUBG, that allows them to invest in new ventures to discover the next evergreen franchises. While it might seem risky to rely heavily on a single product for revenue, Krafton's success story shows the opposite. Their strategy demonstrates how a strong core franchise can serve as a foundation for broader growth and innovation. In the previous video, I explored Tencent's impressive achievements in the gaming world. Today, we are adding another success to that list, Black Myth Wukong. The studio behind this game is backed by Tencent, and just in a few weeks, it has sold an astonishing 18 million copies with a goal to reach 30 million. With a price tag between $40 and $60, the revenue potential is massive. This level of success is a major milestone for Chinese companies eager to make their mark in the premium AAA PC and console markets. The broader impact of this achievement is clear. It shows that Chinese studios are ready to compete directly with established Western and Japanese developers in the AAA space. This isn't just a fleeting success, it's a strong sign of the growing expertise and ambition of Chinese developers. It's also important to note that Game Science, the creators of Black Myth Wukong, transitioned from mobile game development to creating a world-class AAA titles. This reflects a trend we are seeing among many Chinese studios as they venture into high-end gaming. And that wraps up this episode. Don't forget to like, subscribe and leave us a comment, it really helps. Thanks for watching. and we'll see you again soon.